It's been a great couple of months for the natural gas price, with it soaring really since the April lows, around about 250, trading above 350 at the moment. New highs for the year, best levels in more than a couple of years. But where next? Has the price of gas gone too far for now, or are we going to see even further gains in the weeks ahead? I think natural gas is always a really interesting market, plenty of volatility usually, and the last few months have been no exception. We've got the weekly chart here, so you can see where the price is now, around 356. Best levels, we've got to go back to December 2018. So we're 2.5 year highs on the price of natural gas. But it has come, quite a way since the April lows, and it can turn really quickly. So I thought, well, let's take a look at it in a bit more detail. Let's see what's been driving the price. Is there the potential for more gains? Or actually, as we've seen it in the past, are we going to see the price of gas reverse really sharply? Let's take a look at it and see if there's a trade. We do have a trade running at the moment. So the usual mix of trades from all the videos that we do over the weeks. The natural gas trade we've got is actually from the 4th of June. So buying in back then at 303, the price is currently 357. It's our biggest winner at the moment, up £665 or so. So about 2.5 times the risk. Our risk was £250 on the trade. So we'll take a look at that one. Do we need to come out of it? Do we need to move the stop? And actually see, is there another trade to do up at these levels? Hello, I'm David Jones from Capital.com, and I thought this time around we'd take a look at natural gas, because it's clearly been moving. So as usual in this video, I'll talk a bit about why we're seeing it rise so much over recent months, recent weeks. Then we'll look at the levels to watch out for. Then we'll jump back onto the platform, look at things in a bit more detail, and see if we can set a trade up. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. Plus, of course, every Friday at 2:30 UK time, I do a live stream from our YouTube channel where we look at our usual markets and a whole host of others suggested by those watching the live stream. If you're subscribed with the alarm bell notification clicked, you get a message off YouTube just as we're about to go live. Right, let's get into it. Let's take a look at natural gas in a bit more detail. Natural gas is a pretty volatile market at the best of times. 2020, last year, was no exception. So lots of volatility. We saw it hit its worst level since 2016, and then we saw it hit an 18-month high as the year went on. We're seeing that volatility continue this year. Just in the last few days during June, we've seen the price of natural gas hit fresh highs for this year and actually trade back to its best levels since December 2018. So we are at a multi-year high for natural gas as of the time of recording. What's driving this is something of a supply and demand imbalance. For example, European inventories of liquefied natural gas have fallen to their lowest levels in more than a decade. So a lack of stock, increasing demand. Clearly, we'd expect the price to continue to rise. China's been a big importer of liquefied natural gas. Reports saying that it's stockpiling it as a way of fueling its booming economy, of course, and in an effort to move away from what is seen as more dirtier other fossil fuels. But given the fact the price has risen by 20% in a little over a month, has this latest move in natural gas got a bit overstretched? Now is the time to think about taking profits, perhaps even go short, or are there more gains to come? Let's take a look at the levels to watch, then we'll jump back onto the platform. So I think the next big level on the upside is the highs from earlier in December 2018, and that comes in around $3.81, that sort of mark. If we break through that, I think we're looking at $4 as a psychological target. On the downside, lots of support left during June from about $3.16 through to $3.40. But as usual, to put some colour on these numbers, let's take a look on the platform at the chart of natural gas and see if there's a trade to do. So let's take a look at the long term first of all, just to put ourselves in perspective. So I've got a weekly chart here. Each candle represents a week's worth of trading. Going back to about 2016, you can see where we are at the moment. We are back at these levels not seen since December 2018. Back then, it was on the way down from near 5. We saw that massive surge in the end of 2018 or the last quarter of 2018, then gave it all up and a bit more. So at the moment, this is the trend that we're following. Let's take a look at that in a bit more detail. So here's the trend off the lows. We'll come back to the price action in a minute. For now, perhaps let's take a look at some indicators. I thought we'd start things off with Bollinger Bands, an indication of volatility in a market. And the expectation is that the Bollinger Bands should typically capture about 95% of the price movement. And you can see they should stay contained within the bands. And you can see that really isn't the case at the moment. Over the last few days, we are seeing the price of natural gas pushing out through those Bollinger Bands. And I think plenty of people would probably expect something of a reversion back to the mean. If we look at the previous cases over, the last month or so, we had it poke above briefly here mid-June, drop back towards the middle of the bands. Same thing again here, mid-May, didn't stay above those bands for long and pull back in. So perhaps we are overdue a pullback in natural gas, but that can still be an opportunity. Then down here, as usual, we've got the RSI. So a 10-day RSI, overbought, first went overbought, this month, June the 9th, as the price was moving through around 316. As I often say, RSIs can give us an extreme reading too early in strong trending markets. That did prove to be the case back then. But I suppose what's interesting here, we do have some divergence. I've talked about this quite a bit in the past when it occurs, where the market moves to a high, the RSI goes overbought. The market dips and then pushes higher, but the RSI makes a lower high. So this is known in this example as bearish divergence. The market's going up, but the RSI isn't. The RSI hasn't made a higher high. So it can be a suggestion that perhaps the trend you're following, the strength, is running out of steam and we're due something of a short-term correction. Perhaps we'll use that in our trade. But for now, let's focus on the trend. So we've got a good trend in natural gas off the April lows. Trend line support at the moment is coming in around the 320 mark. The most recent major low is down at 316. So again, perhaps that's an idea for a stop loss if we do see a sell-off from where we are now. So for me, I think only if it slipped back below this whole 3 to 320 area would I start to think that perhaps this trend is actually really over. Clearly, at the time of recording, the market's still strong. Let's flip things over to an hourly chart. So here's the trend from those April lows, and you can see how the price has really accelerated away in the last week or so, accelerated away from its last touch of that trend line to where we are now. We do have a sharper trend in place, so I think what I might do is raise the stop on our existing trade, perhaps put the stop on the existing trade up to maybe 340 on the existing trade. So just above the highs from the middle of June and just below the most recent low from about the 25th of June. So I'll move that stop to lock in some profits and give us the opportunity to perhaps ride it a bit further. But what I'll also do, I'll put in an order to buy. So we are overstretched in the short term. But that state of overstretchedness can continue. But what I'm going to do, I'm going to leave an order to buy if we do see a sell-off. I'm going to put an order to buy at 335. So if the market drops back 20, 25 cents from where we are now, the order will get filled. And I'm going to put my stop loss to the other side of 3. I'll go 295 for a stop. So I'm going to be a buyer if it dips to 335 with a stop at 295. Let's set that up. Right, I'm ready to go. So the price at the moment is 358 to buy. I'm not going to buy up here. I've got one trade on already. I'm going to buy 870. If the price drops to 335, you can see it highlighted on the chart there. So if we pull back to where we were just a few days ago, really. And if that order gets filled, put a stop in at 295. So I'm going the other side of 3. I could have a more aggressive stop than that. Clearly, we've got lows in from the 21st of June ahead of 315. But for me, I think that's a fair enough place to have a stop. It's the usual risk of £250 that we risk on these trades. If that order gets filled, the stop gets attached. So I think that's it. We're ready to go. Let's place that limit order. So that order's in, buying 870. if the price dips to 335. I said I was going to move the stop on the existing trade. Let's just do that. So the existing trade has got its stop actually in its original place. So let's move that right away. So the stop on that trade is at 282. We're going to bump that up to 340. So that's updated. I've moved the stop to 340. You can see it there in my open positions. If I go to orders, there's the order I just placed, buying 870. If the market drops to 335, we'll see if that gets filled over the course of the next few days, next couple of weeks. But overall, clearly that trend is still up. You know, it can reverse really sharply in both directions when it gets a move on. It will be interesting if it does start to sell off, where the sell-off stops. I would be watching the whole 3 to 320 area if we do get weakness from here. But at the time recording, clearly a very strong market. That's it for the update. We'll see how things go during July. As usual, we'll come back to this and do an update and see if we've seen that trend continue. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.